Hey traders, how you doing? Tom Willard here with Tom Willard Trading. Another video on trade management, and we're going to talk about now, kind of building off what we learned in the last video um, with regards to stops, reward to risk, targets, etc. Now we're going to start talking about various ways to manage trades. Okay, I'm going to use just one example here, but the examples are numerous, and this applies to all time frames. Okay, so even though I'm going to show you a weekly chart here, this will apply. You can use this on a 1 minute chart, 2 minute chart, 3 minute charts, 5 minute charts, whatever time frame. Okay, and what you've got to do, in my opinion, is run models, run actual trades, and find out which methods work out best for you and on what time frame. If you're a day trader, you're probably going to be on the more the smaller time frames, 2 minute charts, 3 minute charts, 10 minute charts, 15-minute charts. If you're more of a swing trader, longer term trader, then you're using the daily and the weekly charts. Rarely do we get up to the monthly, or at least where I don't. I look at them, consult them, but I never trade them. But I will trade the weeklies and I will trade the dailies, and I will trade the 60s. Okay, for my longer term trades. Longer term meaning holding at least one night overnight, if not multiple days, even a couple of weeks, few weeks, if not longer. Okay, so this is an example of the weekly chart of CLR. And as I mentioned, we're going to talk about a couple things, or a few things here. Um, Building off what we learned last time, trail stops, how trail stops work, okay, and bar by bar and pivots. Now we talked about targets, okay, and you can take the approach of when you get into a trade, set it and forget it, okay. I call it SIAFI, set it and forget it, and you put in your target and you put in your stop, and it either stops you out and you lose what you were expecting to lose, or it hits your target. Okay, and you don't hold on when it hits your target. You get out when it hits your target, and you get out when your stop's hit. Now, the one thing I've mentioned this in videos before, when you're holding overnight, okay, you run more risk of a gap against you. So, for example, um, say for example you were long in this stock here, okay, right here, and this is where your stop is. Okay, the next day, I know this is a big red bar, but this the next day you could have woken up. This is a weekly chart, and it could have been opening down below where your stop was. So in a sense, when it opens up and starts trading, you are well below your stop area and losing a lot more money than you had anticipated you would lose. That's part of the inherent danger of swing trading and holding overnight. However, it's a double-edged sword. You also get gaps in your favor, okay? And when you get a gap in your favor, and if you're trading the right trend of the stock, okay, and you're trading the higher odds chart setups and charts, then typically if there's a gap against you, I've found that typically it'll work for you rather than against you, okay? So you've got to have disaster plans to handle, when gaps go against you, what you need to do. And a lot of times the simplest thing to do is just get the heck out of Dodge, okay? And this is why, I think there's a lot of people out there who say day trading is so risky. And in a sense, you can control your risk a lot better because, the charts are a lot more fluid during the day. Now, that, of course, there are exceptions to the rule. FOMC announcements, um, midday catastrophes that happen in your stock, or a drug getting approved or a drug not getting, things get halted, when circuit breakers are hit, possibly. So these things can happen also during the intraday period, but they're much more rare. Okay, so hence it carries that there's less risk in getting a shot gap and losing more than you anticipated when you're day trading, intraday trading, versus swinging or holding overnight. Okay. So I'm not going to get into the patterns here, but for example, say you're in this trade, you've got or you're watching this setup, and you see it kind of pulls back here. You've got a larger kind of a cup with handle, right? Um, Cup handle, okay, is pulling back here in low volume. You're looking to buy it here, and say you buy it right there. Okay, so now week to week, you're in this trade. Okay, now there's a number of ways. Let me just kind of play it out here and let it run. It ran really nicely, actually. Okay, so it ran up here this way. So your entry could have been right here, okay? Buying it over the 47.50 mine mark, the high of that candle, okay, with a stop maybe down where the pivot is here on 45 at 45.06, okay? So once you're in, okay, and say you've got a target for whatever reason, say there's the resistance, say for some reason you got a target of, let's just say, $80 a share, okay? Just work with me because I'm showing you an instance where it doesn't reach your target and how you can take profits off the table, okay, without it getting to your target if you don't take that SIAFI approach that I talk about, the set it and forget it, which is perfectly fine if you want to do that. If your statistics show and data shows that that's a better guess for you than managing it week to week, or day to day, where you tend to get chopped up by a sloppy chart. Okay, so your entry's there. Okay, and you can go trail stop. So what is a trail stop? Well, it goes up one bar. When this bar completes, okay, you see this green bar, and this bar starts. If you go directly to a trail stop, what happens is you take your stop, which was here, and you move it under that bar, the last completed bar before the one that's forming now. When this bar completes and this one starts, then you take your stop from this bar and you move it up to the bottom of this bar. Okay, this way you're locking in the gains from each week in this particular case, okay, but it's bar by bar, so it could be this particular minute if this is a 1 minute chart, or 2 minutes, or 5 minutes, or whatever, okay, and you're moving your stop up after each bar completes. So you'll notice that you don't get stopped out until here. This green bar completes, then this red bar starts to form, and at some point you notice it takes out the low of the green bar. Well, if you were trail stopping this, your stop would be right under this green bar at, say, 55.23-ish. So you would be stopped out of your position there. Okay, so now some people take a full lot. So say you bought, I don't know, 1,000 shares of this thing, you sell all 1,000 there. Or you could say, you know what, I'm just going to trail stop half and hold half to my target. Okay, or hold it to break even if you want to leave it, or hold it to the original stop. Okay, and so there's so many different ways. It's almost infinite, I think, the ways you could dream up of how to manage. You go down to a smaller time and say, well, I'll trail stop on the weekly, half of my position, then pivot trail daily on the daily chart. Okay, so what's a pivot? Well, pivot is simply, I think I covered this in one of the other videos, is simply a point where the bar to the left and right of the bar in the middle have higher lows. So this is a low pivot. Okay, notice it's got a higher low here and a higher low here. Therefore, it is a pivot. Okay, this is a high pivot. Why? The bar right next to it's got a lower high and a lower high. Okay, now you can go into degrees of pivots because this one's got 4 bars, 5, 6 bars that are lower, here. This one's got 3. People say, well, this is a more significant pivot than this one. Okay, I think that's overcomplicating things, at least at this juncture. Okay, but at least you know what the pivots are. So basically, say we were pivot trail. Say for this particular trade, you bought 1,000 shares. You say, I'm going to take 500. If it all hits my target at $80 a share, I'm going to sell it all. If it trail stops on the weekly chart, I'm going to sell half. And then what I'm going to do is let a pivot form, and when that pivot is taken out, then I'll sell my other half. Okay? So in this particular case, you'll see you sold half here. Okay, and then it pivoted right here. See this little thing, this bar, this tail that stopped you out, okay, was actually a pivot because you noticed that there's a higher low here to the left, or to the right and to the left. Okay, and then the next day it goes up, and then it takes out the low of all 3 of those bars. So your other 500 shares would have been sold here. Okay? And overall, from the grand scheme of things, it wasn't a bad trade because it looks like you got probably about 3 times your risk on this particular trade if you took it. Okay? So that is a trail. There's a bar by bar trail stop, which was the original stop, and then the pivot stop is when you let the pivot form and it takes out that pivot. Okay? Now let's kind of just dry it out here a little bit more. Okay, so now this thing came down, it pivoted, and it went up, and then it took out that pivot too, and then it formed another pivot down here. Then it made a higher low, couldn't go lower. Okay, and this is actually another entry here. You could buy this entry right in this area here. Okay, comes up, makes a new high, topping tails, hits another pivot here, and then slingshots. Okay, another more advanced pattern that maybe on a daily chart or a 60-minute chart you could find a way in. But again, this is about trade management, not so much entries. Some of the other videos cover those things. Okay, so let's just say, for the sake of argument, you got in here, and we took the same approach. 1,000 shares, sell half and half. Half on the bar by bar trail, half on the pivot trail. So they're riding it up. You're still targeting at 80. It goes up. No trail stop, no trail stop. Then right here, this bar takes out the low of this one. Sell 500 shares. Okay. Now you say, okay, well, I'm holding my other 500 shares until another pivot's formed, and then when that pivot's violated, well, this bar here isn't a pivot, right? Because it's got a lower low and a higher low. This bar, however, is a pivot with higher lows on both sides. So now you're still holding your 500 shares. You're saying, okay, when this day starts, you're going, okay, my last 500 shares, if this bottom here is violated at 64.01, then I'm selling those shares. Otherwise, I'm holding to my target at 80. Okay, and then it starts rolling. And it starts rolling and rolling. So now at this point, it's at $77 a share-ish, and your stop's still down here at 64.01. Okay? So you just keep riding it, see what happens here. Okay, she's cruising. Does she hit 80? I'm not even sure she hit 80. Let me pull it back here. 79.62 came within 40 cents of the $80 target, okay, that you may have had. So at this point, you're saying, okay, well, this pivot is so far down now, I don't want to give all this profit back. So what you can do now is switch, say, once it moves within 5% of my target, I'm going to go back to a trail stop. Okay, and then you're locking 76.83 when it breaks the low of this bar here, other than holding here. Okay, but you can also hold it, say, you know what, screw it, I'm going for, this thing can go to 100. Okay, and sure enough, watch happened. It came down. It did hit the $80 target, and then it started falling apart here. Okay, now on the downside, okay, notice this. If somehow you had gotten short in here, now again, this is you're going against the trend. Okay, almost a crystal ball trade. But notice that if you trail stopped here, how much run you would have had on this thing. Look at the daily trail stop. What a run without trail and or I'm sorry, the weekly trail stop. It hasn't taken out a weekly high until right here. See, this was actually 58.44. Actually, it didn't. 58.43. It was one penny lower, so you would have still held. Here, you would have gotten shaken. Okay, 58.48 to 56.95 here. Okay, that is trail. The trail stop on the weekly breaks and goes down. Notice also, based on the previous concepts, it came right down here to this support area where it languished for about 4, 8, 10, 12 weeks. Right? It found support in this area after coming down viciously off this high. Okay, and then it came down here pretty hard. Real hard, actually. Okay, and now here we are right now in 2015. Okay, but notice how a pivot stop here, the same approach where if you did 500 on the trail, you would have gotten 500 here and say, okay, wow. Okay, and then here, like I said, once it moves towards your target, now I'm not sure, again, I didn't short this here. And if you had a target of $30 a share, that's a pretty aggressive target, right? My initial target probably would have been this area here. In fact, if I'd gotten it up near the highs, I would have actually looked at this probably the 65 area and then this 55 area. I would not have expected it to do this, but of course we've had some pretty interesting things happening in this group. Okay, so that is a breakdown of trail stops, either bar by bar or pivot trail stops. Okay, and so there's various ways to do this, and again, there's just numerous ways to go down to smaller time frames and say, look, I'm just going to go lock in profits, go down to a smaller time frame, or give it more room and let things run. And ultimately, there is no right answer. Okay, there is no right answer. You have to discover that for yourself based on your trades, your style of trading, the patterns you take, and then managing them out and realizing the market shifts at times. You've got markets become more volatile. A lot of stops will get clipped. A lot of pivots will get clipped, and then they'll start moving aggressively in one direction. Then stop on a dime. And look at this gap here on the daily chart of the same stock, massive gap. So let's just say kind of point out what I talked about earlier about the stops. Say you were long for some reason in this thing. Okay, and your stop was under this low at 49.25. Okay, and on this day you're thinking, oh crap, I'm still up a couple bucks to my stop, and then you wake up the next day and it's down here at $46 a share. Okay, so you're saying, well, based on my share size amount, I'm willing to risk whatever, 500 bucks or whatever. And now, because of the gap well below your stop, okay, you are now in it for probably whatever. You're down 1,000. You're down twice as much as you had anticipated to be down. Okay, and the answer is not to just say, well, I'm not taking my stop. You can see in this particular case that you'd still be well if you just sold it on the open. Okay, you'd still be looking pretty on things. Okay, but this thing could still go to 0 and it could go all the way back up to 80. Who knows, right? Right now it's trying to bottom here on this daily chart. It's made a higher low. Okay, and it looks like it's trying to break back up into this tradable area. This is actually a good day trading one to watch on the long side over the next few weeks. See if we can get back up in here. See if we can get some bounces on these things. Okay. So anyway, I hope you found this video helpful on the trade manager side. And again, a lot of people contact me, ask me, hey, so how should I manage my trades? And the answer is there's no set way that's better. Okay, and you've got to take the statistical approach from a statistically significant sample. You remember, I mentioned this multiple times throughout the videos, that you can't go for wins all the time. You have to accept the losses and accept the big picture. Any one particular trade in one particular day, week of trading should not be indicative of your end results. It's the longer term, month over month, at the end of the year, you want to be continuously improving and improving your income. All right, with that, I want to thank you for tuning in to this week's video, and I look forward to seeing you in the next video. Have a great one. If you have any questions, email me, tom@tomwillertrading.com. Have a great week.